And for more on this, we're joined by Dennis-Kenji Kipker in Frankfurt. He's a research director at the Cyber Intelligence Institute. Welcome back to the program, Dennis. Now, Bitcoin has had quite the run this week, jumping more than 20% to over $75,000. Is this rally being driven entirely by optimism over Trump's proposed regulations, or are we seeing underlying institutional demand finally catch up with supply?
I personally would say what we currently see, it's a mix of both. So not one single cause we have here. Trump's public push for this Clarity Act, of course, gives the market some kind of clear news trigger. And of course, that kind of headline can move prices fast. And at the same time, real money has also been coming in. So US Bitcoin funds took in about $570 million in just a single day. And this week, and the strongest day in over 3 months, led by BlackRock's fund. And falling long-term interest rate also helps. And when these rates drops, investors are also willing to put more money into riskier assets like Bitcoin. But I would say that the caution is still there. So these fund inflows have been choppy in recent weeks, with some days of buying, some days of selling. And that also means we don't yet have clear proof of one steady wave of institutional buying, what we need. And it looks more like policy news, lower rates, and returning investors all lining up at once at the moment.
Now, some analysts say investors should be positioned for a move to $100,000 by the end of this year. Do you think that's a realistic outlook?
I would say it's possible, but it's not a safe assumption. So Bitcoin would need to rise more than 30% from current levels to get there. And forecasts are all over the map right now. So there are some banks out there that still see $100,000 to $150,000 as achievable by year end if institutional buying keeps building. Other more cautious estimates closer to $85,000 to $120,000. And one big bank, Citigroup, recently lowered its outlook and stopped assuming steady new money will keep flowing into Bitcoin funds, which shows real disagreement among professional forecasters. And I would say a lot depends on this Clarity Act actually becoming law, and prediction markets currently put the odds of that happening this year at only around 1 in 5, so down sharply from earlier this year. So the biggest catalyst behind the $100,000 case is still in doubt.
Right, and President Trump claims his Clarity Act will trigger a revolution in finance. And with the bill establishing clear federal oversight and insolvency protections, how quickly could we see traditional Wall Street banks fully integrating blockchain technology into their daily operations?
Yeah, it's important to note the bill has not passed yet. As you mentioned, it still needs a Senate procedural vote in September that requires at least 60 votes, and Republicans hold 53 seats. So at least 7 Democrats would need to join. And after that, it would still need to be reconciled with the House version and signed by the president. So revolution, as Trump announces, is only a long-term sales pitch, not something happening this year. And even in best case scenario, passage is only the first step. And banks generally move very slowly, carefully with new technology, building compliant custody systems, staff training, internal controls. For a new asset class, realistically takes several years, not months, even after the legal rules are settled. What's more likely, I would say, in the near term, bigger banks expand existing crypto trading desks and custody services step by step, rather than some kind of overnight shift to blockchain-based daily operations.
Dennis-Kenji Kipker from the Cyber Intelligence Institute, thank you very much for speaking to us.
Thank you.